Welcome to the Sellernomics podcast, where we share valuable tips and information in the Amazon and e-commerce space. Each week, we deliver the best interviews with some of the top Amazon personalities in the industry to help you grow your business. Today's episode is brought to you by GETIDA, the global leader in FBA auditing and reimbursements. Get $400 in free FBA reimbursements at getida.com/Sellernomics. And now, here are your hosts, Rob Stanley and Lisa Kinski.
Hey everybody, welcome to today's episode of Sellernomics. My name is Lisa Kinski and I'm joined as always by my co-host Rob Stanley. And today we are talking about Amazon bookkeeping. I think this is always an interesting conversation because neither of us are, at least I know for me, not an accounting or bookkeeping person.
Accounting.
At
I hate
all.
bookkeeping.
So it's always fun.
But I like this guy.
Yes,
I just
guy.
hate bookkeeping.
Awesome guest. But I always think it's funny whenever we have a guest come on about a topic that both of us are just like deer in headlights. So
Yes,
we always end up
100%.
learning a ton. So very excited to welcome Nachman with Connect Books. And we're going to be talking about, like we just said, Amazon bookkeeping and the key to riding out the recession. So let's bring him on. Nachman, how are you today?
Great. How are you? Thank you for having me on. Thanks, Lisa. Thanks, Rob. It's great being here.
Yes, we're
Yeah,
very
absolutely.
excited to have you. Always good to see you in your team at shows and things. And I talk with Michael pretty frequently, but looking forward to get to know you and your service more today. So let's just jump straight into it. I mean, we're talking about the key to riding out a recession. How has the market changed in the last, I don't know, let's say year, but that might even be too long. 6 months?
It's better to look at a year because,
Okay.
a year ago, the market was very high, like meaning to say, kind of was booming. There was a lot of money out there. Sales were up. People couldn't hire. It slowed down a little bit. Holiday season took another boom. Then it took a bigger dip and it's slowly picking back up. But the market today is very different than the market completely a year ago. A year ago, like it was just easy to sell. Now, when I say easy to sell, I mean across the board. It's whether it's in software, whether it's in Amazon sales, whether I see it from all different angles. So when there's a lot of money outside, people have a ton of money. Everybody is just buying. And also when interest rates are very low, people think differently because people know, okay, if I need more money, I can always get another loan. I can do this. I can raise money. Yeah, those were the VC companies. The minute interest rates start getting more expensive, people are thinking, okay, so if I'm overspending, I won't be able to get more money. So then I got to really make sure that I'm being profitable and I'm also saving something so that in case I'm not like that. So people are thinking twice these days before they're buying. People are buying, and besides that, people are buying less because of inflation and all that put together. But also when people have less money and the economy is down, people are really thinking twice. So in terms of sales and everything, it definitely took a huge drop. Things have definitely moved around. And what I'm seeing is that it also depends really on different type of businesses. I once heard a saying like, when it rains all over. So when there's a lot of sales, then everybody does well when it's a good economy. What happens is when the economy doesn't go that well, what I see is, and I see this in a lot of different industries, and I've seen this in many industries that prior joining the Amazon industry, is that when the economy doesn't do well, what happens is only the good ones stay out. So let's use like a common example. Let's say during COVID, everybody was busy refining their mortgage.
Mhm.
And I saw a study recently that 60% of Americans have mortgage rates under 4%. So that's kind of really what's a lot causing the housing crisis.
Oh.
But almost every single person refinanced their mortgage during COVID. Now, during COVID, if you tried to call a good broker, they wouldn't answer the phone. They had lists of like maybe 10 applications a day to kind of fill. They were just trying to catch their breath. So there's a lot of people who like were laid off from different industries, like people who was in travel or in other industries that got laid off. So they joined the mortgage industry. And they started doing, and they were also able to put in applications because there was so many people applying, and the good mortgage brokers weren't picking up. So you're like, let me just find anybody who's going to help me go through the process and get it done. Now, as times have changed, all those people who joined during COVID and didn't really have real business are completely out of the mortgage industry. And you see huge decline, whether, even Chase has laid off, they have laid off a lot of people from the mortgage department because they're just not putting in that many applications. So what it basically happens is the good brokers, the people who know their trade, those are the ones who know how to find new customers. Those are who know how to retain customers. They're actually staying at the top. The ones that don't, they're completely gone. And the same is with Amazon. When you want to buy something and there's like 5 different variations to choose, you're kind of like, if you have money, or everything is like just kind of in that windy hustle. So then you're kind of like just you're picking whatever it is, you don't really care too much these days. You're thinking twice before you're spending. You're actually looking at the reviews, actually reading the reviews, looking at the products. You're actually doing a return more. And you kind of see Amazon is also starting recently updating, like they're writing if the product is frequently returned. And the other stuff are also coming out. So people are actually very more like skeptical and looking more around. So, what I would say is that for the good sellers, I still see them thriving, still see them making money. And good sellers are also, it's not just that they're making sure that the product is a good product and they have good reviews. And, they say your product actually has to solve a problem. You actually really have to have something good to sell. But, usually these businesses are also on top of their books, and they made sure to be profitable last year. So they're making sure to be profitable this year. And they're kind of going to be, going through. So the people who have good businesses, the way we see it, are pretty much look like they're able to hang through the recession. Maybe they might need to downsize a little bit to kind of stay a little bit in the loop, and then they'll expand again. The other companies who didn't really have a business or just jump straight into it and don't have a real strategy, now when it's just harder to sell, you can't just do what you did last year. So those people are kind of like fizzling out. That's kind of the way we see it moving around. And yeah, so it's just like, you have to really be on top and just make sure that you know what you're selling, and make sure that you listen to your customers and you're doing it the right way, so you can kind of just keep on moving and thriving through.
Yeah. And I think you're definitely right. People are being a lot more choosy with where they spend their money, and doing a lot more due diligence before they place an order. I just moved and got a new desk, and the listing title said it was X dimensions, but then the product photography were totally different dimensions. And I'm like, well, I can't really trust what I'm buying here. I'm going to go to a different seller. So that's kind of a conversation about, listing optimization and things. But when you talk about the good sellers that are going to make it through and ride out the recession, they're obviously doing something right. But what are some of the things that you see sellers do to lose them the most money? Maybe the most common bad practices, because we're not talking about, not a lot of sellers have like a lot of overhead. So where are they kind of losing out on this money?
So I'll talk from a bookkeeping perspective, where kind of hands-on. We have the software where we're serving over 1,000 customers, and then we also do bookkeeping and consulting on the side. It's not on the side, it's just a separate company where I'm more involved on a hands-on basis. So I'll share with you some stories. Here's a story with a customer who was doing very well the last 2 years, and they were huge. They're, I don't know, like you're talking, I don't know, probably 40-50 million in sales, and they never really anticipated what's going on in the business. And meaning anticipating, they never really dug through it, and they never had a normal bookkeeper, and they were paying the bills. Now the reason why everything was so good the last 2 years, because let's say the business made $1 million a year profit, but the business also lost $500,000 a year. So they could have avoided $500,000 a year in losses, but they had no clue. And now basically they're up to, they only made $500,000. Now what ended up happening is that there were certain products that were contributing a lot to the growth, and they're having issues with those few items. And they're running let's say they're running around 50 million in sales. So let's say 20 million in sales were contributing to 80% of the profit. And the other 30 million weren't really contributing anything, contributing maybe 5%. So by not having the proper books, and by not having a very detailed bookkeeping to understand what's going on in the business, the minute things move a little bit downwards, they're kind of struggling. And that's what they're going through now. And these days, people are returning a lot more. Amazon fees have gone up, supply chain's gone up, everything is moving the complete different direction, and they are having these few issues, and now they're kind of under the water already for the last 6 months. So it's what I would say is that, especially with bigger companies, if they don't have a strong grip on their bookkeeping, they don't have a strong grip. Meaning to say, if you don't get from your bookkeeper every single month a proper P&L, and you don't see what your gross profit is and what your net profit is, and it's not just about making books. I can make books that will show you profit. I can make books that show you loss. You have to have the real numbers. Sometimes I have to have tough conversations with customers. Like we tell them, hey, you really haven't been making money. And the guy's like so upset at me. You did something wrong. It's like, look, I'm not lying to you. This is the last thing I want to do. I'm telling you the truth. This is what it is. So you have to make sure. And there's also a lot of ways, especially with a lot of big accounts. I mean, I have many times gone into certain companies. For example, I'll give you one of the biggest things where people can't see off is cost of goods sold. Now, if you're running a private label with 10 items and you know how much each product costs you, it's simple, straightforward. But if you're running, let's say, 400 to 500 different SKUs, and then these customers are running 20,000 different SKUs, you have to make sure that you have the proper cost. And for example, I once showed a customer that he's losing money, and I showed him, like, your profit margins are low. He's like, it doesn't make sense. So we picked up a product, and it showed that he made no money. He's like, I was supposed to make $7 on that item. So I said, okay, and can you show me how you planned it? Oh, he went to the Amazon FBA calculator, put in the product, and shows that after all the Amazon fees, supposed to make $7. I said, number one, you forgot to account for your returns. You forgot to account for unsellable returns. You didn't include PPC. There's so many other stuff that you just didn't include. Like, what were you thinking? I was actually shocked. We're talking about a seller doing 50 million. Like, people like just. And there's a lot of other ones like that out there. They don't know. They just put in the calculator and moved it. So, understand, making sure that the cost of goods sold is accurate and making sure that all the fees are accounted for is not something that's easy to do. And, Amazon fees could be easier to account for because you can use software like ConnectBooks or any of the other programs out there that can account for it. But cost of goods sold also depends a lot on your own system. Like, I've seen many people using complicated softwares, or like using SellerCloud or GoFlow or NetSuite, any of those type of softwares where you need to make sure that the cost of goods sold is reporting. We actually had another customer who did probably like $80 million in sales last year, and they were using a very complicated ERP, which the problem with these complicated ERPs is you have to be like a real guru to know that stuff are accurate. And we actually built some features around that to help customers in that part. But when we actually didn't do the bookkeeping, we were just like consulting for them. When they finished that, their P&L was understated with $2 million. Now, when a company that has 100 employees and it makes $2 million, I say it's a nice profit. It's not something small. They made $2 million a year. But when they finished and they realized that, hey, their P&L is off of $2 million, kind of the whole dynamics of the business changed. So what happens is a lot of them, like, if you don't have a strong grip, understanding, what I would say is like the two key aspects I always like to look at. I mean, I would say I've put it down to three. I mean, the third one is the easiest one, knowing your overhead. That should be pretty easy. What your payroll is, basic expenses, knowing that. Next thing, what I would say is understanding what your gross profit margin is. How much are you profiting after all Amazon fees, before the cost, and making sure you have the accurate cost. So you're kind of like in line. So if you do like some KPIs where like that your margin before overhead has to hit 15%, and the minute you don't hit that margin, like, hey, something is wrong, and then you kind of start digging and you kind of can find where the problem is. So that's really, really important. And I find a lot of sellers have a very hard time with that. The bigger accounts that people have like very good CFOs and stuff like that usually have it hammered down. But on the other end, I find people like really struggling at that part. And when the times are changing, I'm seeing a lot of bigger accounts like really nail down to it. And, the reason why people haven't nailed down to it last year is because last year, let's say they were making 2 million, but they lost 1 million and they didn't really care. Or not that they didn't care, they didn't know to care. And as long as they made 1 million, they were happy with it. Now that million that made last year is drying up a little bit because the economy's down and the losses are still kicking in, they kind of have to like balance it better. So that's kind of, like how people lose a lot of money. I'm talking from the bigger accounts and stuff that, I have seen in the last 3 months from quite some big Amazon sellers, which I didn't see this last year.
Yeah. Nachman, what about, you brought up a couple of good points I want to kind of touch on. You were saying that like the person thought they were making a profit and they weren't taking into consideration like PPC, probably even storage fees, things like that. So Amazon is notorious for making changes, right? And not necessarily telling everyone. I was talking to the seller and they were actually, I think, in the process of selling their company or getting ready to. And I think it was last November, Amazon made some changes. Their company, not your company, a different company, didn't catch some of those changes. So when they were doing the books, it looked like they were actually making a better profit than they were. And they just had not discovered that Amazon made some changes. How do you guys deal with that when Amazon makes changes and maybe it's not reflecting correctly in the person's accounting system?
Yeah, that's a good question. I've been there not me, but I've had these stories a few times where people, dealt with customers that wanted to sell, and they had their, they had this, they had their P&L, how much money they were supposed to make, and to do the due diligence process stuff have changed, and they kind of come back to me. It's kind of a pain. Most of the times, the problem was related to they didn't have proper bookkeeping. They didn't have bookkeeping set up the right way in the beginning, and just didn't do stuff right in the beginning, and then through the due diligence process, stuff got uncovered. And the answer is, if you do the due diligence right away, meaning if you set up the books right away in the beginning and you make sure it's done right, then by the time you come there, you shouldn't have any problems. Now, to answer your other question, when Amazon makes changes, as many changes Amazon makes, your book should always be right no matter what. On our end, Amazon has refactored their API, which I think you guys are aware of and everyone is aware of. They have changed code bases. We had to have a separate development team working for 6 months to just recode everything that we have built to work with the new API, and so that every other app who wants to stay in business. So we're on top of the changes. We're on top of every time everything comes out. But I want to answer your question in a different form. So in bookkeeping, there's something called a bank reconciliation. Now, if I was to give you a profit and loss of your business and I was to show you that you made $100,000 last month, how do we know it's accurate? Maybe you gave somebody a check for $20,000 that's not accounted for. So how do we make sure? Like every time I give you books, I'm going to go through like 15 different bank accounts to know what's going on? The answer is no. So what we do is something called a bank rec. A bank rec is that we take your bank statement and we make sure the beginning balance is in QuickBooks. So let's say in the beginning of the month, you have $100,000. Then let's say another $100,000 came in, and let's say $50,000 went out. So then at the end of the month, you should have $150,000. So if the beginning balance and the ending balance matches to the bank account, then we know every dollar that came in and every dollar that went out is accounted for, and it's 100% accurate. And that will happen, meaning I'm giving you an easy example of $100,000. But you're talking your balance is $100,152.25, and then you have like 100 checks coming in, 100 checks going out, and still it all matches, then it's accurate. So what we do in bookkeeping is we have something called a bank reconciliation, which we reconcile the books every month. And to make sure the books are properly reconciled, if your books are reconciled, then you shouldn't have any issues when it comes to the due diligence process. Now, where ConnectBooks is very different than a lot of other accounting softwares, and where I would say where we shine a lot is making sure the books are accurate. Now, what I see a lot of times people do is they try to make QuickBooks into like a whole ERP system. Like they try to ship orders from QuickBooks, they try to do stuff from QuickBooks, which I'm completely against of. QuickBooks is an amazing software. I spend it probably most of my day, busy with it all day, and I love it. But it has its limitations. And I would say its limitations is it's not meant to ship orders. Yes, if you ship out 10 orders a day, you can do it from QuickBooks. And if you're planning your business to stay at 10 orders a day, yes, then do it. But the minute your business is going to start scaling to 500 orders a day, you're not going to be able to create 500 invoices every single day in QuickBooks and ship it to customers. All of a sudden, your QuickBooks is going to get slow. Your QuickBooks is going to start breaking. It's going to start issuing. So that being said, when we bring data into QuickBooks, our focus isn't on shipping out orders, or our focus isn't about like managing multi-channels through QuickBooks. We do multi-channel. We do Shopify, we do eBay, Walmart, all Amazon marketplaces. Our goal is when we bring data into QuickBooks is to have proper bookkeeping. Now, the way we do it is we summarize it, and so that's how it takes up less data, and we make sure the important parts you need are in QuickBooks. Now, one of the most important parts that we do is that we make sure when we bring the data from Amazon into QuickBooks, it matches your bank account. So what happens is, let's say you're an Amazon seller and you're doing $200,000 in sales. Now, let's say Amazon took off $100,000 in fees. So Amazon's giving you now $100,000. So that's your end deposit, $100,000. When I bring those sales into QuickBooks, the way we do it is we bring in the sales, $200,000, we minus off the fees, and then we will bring in a payment, which that would match exactly what came into your bank account, and that would be $100,000. So the point is that when we bring the data into QuickBooks, we don't bring in every single day orders. First of all, it's going to ruin the QuickBooks. Second of all, the second problem, what happens is if you bring in the orders every single day, by the time you get paid, you have to now go through your QuickBooks and reconcile those 2 weeks of orders, because otherwise you could be missing orders or they can be entered double. And I've seen that many times. And there is no way to do it unless you spend like 4 days. So the benefit of us doing it this way is that we know they're 100% accurate, because by the time the data comes in, it all comes in at one time and it matches back to your bank. So there's no guesswork involved. If you see like the payment in there and the balance of all the invoices that ConnectBooks created for that customer is paid, then you know it's all good. And you know it's there. Now, the second part of your bookkeeping is to reconcile the bank. So you know that when you make sure that you started off the month with 100,000, now 100,000 was supposed to come in from Amazon, you should see that deposit coming into your books through QuickBooks, meaning through ConnectBooks. ConnectBooks should be the one creating that. And if you don't see it, then you know you didn't export. So it's a kind of a very like bulletproof process to make sure it's done right and to make sure it's properly accounted for. And with our customers, I can say that we never had an issue where somebody has thought that they were making money and tried to get an LOI and then came back to me and say, hey, you know, we tried to sell, we couldn't sell because the books weren't accurate. I never had that issue, because the way we do it, it's 100% accurate, and we always keep it in that format, and that's how we can always know that, you know, people do it. And as a matter of fact, we're actually converting over customers from other platforms just for this particular reason, meaning these other good softwares out there that do bookkeeping and they do ConnectBooks integrations, and, you know, but in terms of the way their vision and their focus is very different than ours. They're not focused on clarity. They're not focused on accounting. They're focused on, they're trying to do everything. And, you know, they say they have this saying, a jack of all trades is none, like something like that. So they're trying to do like everything. They're trying to do order management, shipping, and then they connect the ship station and this and that. And then they can do everything through QuickBooks, and then kind of everything comes crashing down. So that's kind of where I see it, you know, going very different. And, you know, that's where I see a lot of people coming to us, is because they want to have it accurate, they want to have it clean, and they want to know when they see a P&L at the end of the month, if this is the money it says they made, this is the actual money.
Yeah, absolutely. We're going to take a quick break, and then I want to ask you, Nachman, about what sellers should be looking for in a bookkeeping service provider to be sure that it's the right match for them and they're getting a reputable one. So that'll be right after this short break.
Did you know that Amazon probably owes you money for FBA reimbursements? Get $400 in free FBA reimbursements at GETIDA.com/Sellernomics.
So be sure to head over to GETIDA.com/Sellernomics for that first 400 FBA reimbursements free. Again, on with Nachman Laser with ConnectBooks. You've talked a lot about the ConnectBooks methodology, which is amazing, and how you guys kind of have created this bulletproof system and lots of checks and balances and due diligence. But for a seller who just cannot wrap their hands around the bookkeeping process like Rob and I would be able to be, how do they know that they're hiring on a reputable bookkeeper? Like, what are some of the things that they can look for to be sure that they're not going to be hiring a service that's going to give them incorrect numbers? I mean, is there a way to do that?
Sure. So that's a very, very good question. And ultimately, you know, I could say it in any industry. Like, let's say taking somebody to do your Google ads. Do you know if they're good? Do you know if they're not good? Only after you flush money for a year for them, usually will you know. That's one way, but ultimately that's not the answer you want from me. So I actually have a very good solution for this. so just to kind of like break it up a little bit, ConnectBooks is an integration platform that connects to Amazon and pulls the data into QuickBooks. We also have a bookkeeping company on the side, which we can do like a full package of full bookkeeping. Now the software, you can use it on your own. You don't need to hire us for your bookkeeping. And I would say less than 5% of ConnectBooks users actually hire us for bookkeeping, because a lot of people either have in-house or they have bookkeepers, they have relationships they've been using for the last few years and they still want to continue using them, and they go on their own. So with one of the things I've been doing recently on ConnectBooks, and we actually started working this very heavily, is if you go on our website, you see something called Find an Accountant or Bookkeeper. I mean, it's pretty new, the website, meaning the page is pretty new, and we are adding on a lot of bookkeepers and accountants as we go along. Now, I am not adding on anybody. It's not like if you call me up and say, hey, I'm going to send you business, put us on. No, the answer doesn't work that way. It works that way is I have a conversation with the accountant. We usually make sure that they have at least 2 to 3 e-commerce clients. We make sure that they understand how e-commerce bookkeeping is, and also they have to agree to work with the ConnectBooks methodology and kind of work this way. So, well, one of the things we're starting to offer now is kind of like a vetting process, where basically, like, when a customer comes in, one of the things we ask them, like, okay, usually when on a call, like, so who's going to be doing the bookkeeping? So sometimes a business owner can say, look, I can do it myself. It's pretty simple. Someone says, look, it looks very overwhelming. I need a bookkeeper. And then we kind of like look at the company type, see what type of bookkeeping they want. We have different ways how to do it, meaning there's more detail, less detailed. And then we kind of look what their price range is and what kind of service they want. Somebody says, look, my budget is only $500. So we can pair them up with somebody who is competent for $500. Now, the reason is if you rely on us, we're putting our name out there. So that's, I said before, I don't just put anybody up there. Who I put up is people who I vetted, and we know that they know what they're doing, and a lot of them have been working with us for already a few years with many other ConnectBooks customers. Like if somebody who I've been working with already for 2 years, and we also see based on support chats that come in, right? If an accountant asks a question, we see right away if they know what they're talking, if they don't know what they're talking, and we always help them, but we kind of know who we can rely on. So if they're looking for somebody really reputable to do their bookkeeping and they don't have one, they can reach out to us, call us in, and we'll definitely hook them up with the right person and making sure that the person knows what's being done. And we don't charge extra for that. It's part of the ConnectBooks service that will match you with a bookkeeper. It's not like it's a fee.
That's excellent. That. Yeah,
API
I think I know some people are going to have to send your way for sure. So that's awesome. That's awesome. Well, Nachman, why don't you tell us a little bit about ConnectBooks? Like, how did you get it started? What brought you to the point that you're like, I need to help people out with their books, which, like Lisa said, her and I would definitely need help. So
because some people just need help.
I can relate to it. I can relate, people help, because there's stuff that I don't like to do, and I always look for people like me in other industries. But so my background is I used to work as a CFO in a large company, and at the same time I went to school. I actually have a master's degree in accounting. I graduated school from FDU, and I was looking to more go the CPA track, but had a hard time at that. So I decided to open a bookkeeping company, because I was basically running the bookkeeping in this large wholesale company. I decided to open a bookkeeping company to work with small and medium-sized businesses. So I started that, and then like 5 months into the process, Amazon sellers who actually they were looking to sell their business, but it was one partner was buying out the second partner. Now partner A was buying partner B, but partner B was not a 50% partner. Partner B was only a partner, and like they were private label. They had like 10 items, but partner B was only a partner of 3 out of the 10 items. So they needed good bookkeeping to understand how much profitability they're making per product. They also had to split the overhead and a lot of other fees to kind of have a proper analysis how much money this partner is making, and that's how they can do a proper buyout. So that's kind of where I got introduced to the Amazon industry, and they were kind of telling me, there's no software, there's no nothing, and if you can do something and help people. And then I got another few Amazon sellers approaching me, kind of the same work. And after working like 6 months on all different type of spreadsheets, I was like, if I can now take this, put this into software and automate it, I can build my business. Now, originally I didn't build ConnectBooks for I built originally just for my bookkeeping company, but as I started talking to people, they were like, look, we have in-house bookkeepers, or like we're big companies, like we can't outsource to a small company, the whole bookkeeping, but we would definitely use your product. So that's kind of when I changed it too. And, we kept our bookkeeping company separate, where we focus on small to medium sized businesses, doing, and we only focus these days on Amazon businesses in our bookkeeping. And then we created the product, and we kind of, go from there. One point which I would want to make, which a lot of people ask me, is they say like, I have an accountant and my accountant takes care of everything at the end of the year. Why do I need a bookkeeper, or why do I need books? Big deal. He files my return. So I kind of say the difference is, there's a very big difference between an accountant and a bookkeeper. The accountant has one thing in mind: maximizing tax deductions. And, today's tax day, and they want to get your tax returns in, and they say, I'll see you next year. A bookkeeper is kind of who's going to work with you hand in hand on a monthly basis. Now, at the end of the month, if the numbers are not what you want it to be, who you're calling? You're not calling your accountant, because your accountant only sees your books once a year, and in 1 hour, your accountant is not going to have enough time to do enough deep, thorough analysis of your business to understand where you're making and where you're losing. Bookkeepers are more the granular. They're not focusing on maximizing tax deductions, but they're focusing on giving you that profit and loss, as we described earlier, to make sure that you account for every penny, and making sure stuff are done right, and knowing your profit margins, know your break-even points. That's really where the bookkeepers come into play. So if your business is that you want to really understand on a month-to-month basis how well your business is doing, that's kind of where you want to focus more of a bookkeeper. If you don't care about it, then you just want somebody to file your taxes, then maybe just go with the accountant.
I'm glad that you explained the difference between the two, even though it's silly. I don't know it. My mother's a bookkeeper, and I have an accountant who I talk to once a year. So I should know the difference, but I think that gives people a better understanding. Nachman, thank you so much. I think that you might have a special offer for our listeners.
Yes,
is that right?
We do have a special offer. So we're going to offer 20% off for the first 3 months. And the code is GETIDA. Just to know that it's only for the first 25 redemptions. So guys listening to it, you better hurry, because soon there won't be anything left.
Yes. So again, they just go to connectbooks.com and hit sign up and put in the code.
Yeah. When they come to the page where we ask them for the credit card form, they're going to see there's a button there, add coupon, and that's where they'll put in the coupon code GETIDA. But we do offer a 30-day free trial. So, they won't get charged for the first 33 days. And then after the 30-day trial, the following 3 months, they'll get 20% off.
Awesome. And that's only for the first 25 signups. So
Exactly.
Guys, if you're hearing this, or if you're viewing this on release day, sign up today, because it's going to go out quick. So again, that's connectbooks.com, and the coupon code is GETIDA for your first 20% off. I'm sorry, 20% off for the first 3 months. And that's even after the 30-day
After
free
the
trial.
30 days. Yeah.
So that's 4 discounted months. That's a free month and then an extra. So amazing. Nachman, thank you so much. And we're actually going to have you on Show Us What You Got as well, so that we can see the software that you've created. So everybody definitely be sure to come back and look for that episode as well. We'll tag it in this one. But thank you so much for sharing all this wonderful information with us. We really appreciate it.
Thank you so much.
Wonderful. And we will see everybody on the next one. Thank you for tuning in.
Thanks for joining us this week on the Sellernomics podcast. Special thanks to our sponsor, GETIDA. Did you know that Amazon probably owes you money for FBA reimbursements? Get $400 in free FBA reimbursements at GETIDA.com/Sellernomics. Be sure to join us again next week for more great tips on how to grow your business. And thanks again for listening.